Oy vey. Forgot to make coffee. Then I had to get more bullet mix, and then I ran out of Nespresso pods. I'm like, So anyways, guten Morgen. You guys ready to go? Let me mark this as the beginning. Start. And let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma! Hey, good morning. My name is Wayne McDonald. I am a currency trader. Man, this camera is messed up. Oh, let's get this set. It's a little better, maybe. Now it's a little not quite right. Anyways, we'll call this good enough for the girls I go with. So anyways, good morning. My name is Wayne McDonald. I'm a currency trader, and I love being a currency trader, and I love all things currency trading and investing. So you might invest so you can carry swap, or maybe you day trade, or maybe you scalp, or maybe you market open trade, maybe you session trade, maybe you swing trade, maybe you position trade, or like I said, maybe you carry trade. So welcome to Forex.Today. We're a community of 17,000 traders on YouTube, on Twitch, on Facebook, all streaming live every single day, Monday through Friday here at Forex.Today. Brought to you by tradersway.com, tradersway.com. You're a trader, they're a broker. The table is set, the candles are lit. Look, the wine is poured. Sit down, have a drink, relax, fall in love. Trader's Way, why would you fall in love? World-class customer service, fast execution speed, small spreads, big swaps. But of course, just the idea that they want you to be educated so that you can succeed. That's the kind of business partner you should want in your currency trading business. Is that a little better, little centered, a little more? What's up, Benny? So, ask questions, get involved, take notes. If you learn anything today, please document what you learned by leaving a comment on the recordings. I like the thumbs up. It just tells me I'm covering the right things. Did you guys appreciate the conversation on how to structure investment vehicles, borrowing from different alternative investment industries? Not your typical conversation on YouTube, I don't think. A spoonful of pips makes some medicine go down. So anyways, happy day to you. Hey, it's a Wednesday. It's a good day to trade. Well, inventories typically come out, all that kind of stuff. But right now, I wouldn't expect much volume or volatility. It's just that time of year. That's a big text file, Danny. Okay. So we're still in risk-on mode. The money's come in. Brexit has been solved. There's a lot of uncertainty that has been removed. Very cool. Ben says he's shorting euro dollar. Okay, great. We can take a look at that. Right now, I see a weak dollar and a weak euro. So I can tell you right away, Ben, it's at least a mediocre trade. I think if you were going to trade that way, you might have wanted to look at euro kiwi. or Euro Aussie. Maybe even Euro Yen. Okay, but it might be fine. We'll take a look. Where did you sell it? 122.50? Yeah, Alton says, yeah, textbook. Oh, yeah. Yeah. But did you sell it off 122.50? I guess we'll take a look at that right now. Now let's go over to let's do this one. One of these ones. Yeah, the problem, I think, I don't know if it's a problem, but the concern ultimately, okay, is you're selling, even if it's justified and warranted with targets like this one, I want you to understand that ultimately you're still selling a higher high. Okay? So, yeah, that's all. I mean, yeah, right. So at what point do you want to actually become bearish? A lower low would do it. Maybe a double top. Okay. So you got the right price, I think. But I think the time is too early. Okay? Can you guys see that? Like the price is cool, but you're first in, and that's a disadvantage, not an advantage. So like, what do we know? We know that that is a higher high, and that this entry on Sunday predicts 123 and some change, and it got pretty close to 123, so there is a top there. Okay, you see that? That is a top, but the way that it's been created, I think you're better off like this. Okay, you got that? So you're doing the right thing, but I think it's too aggressive, too early, and I don't know. It's just too early. It's just too early, I think. It's not a bad trade, of course. It's just too early. So don't be shocked if we're up here, because it certainly can be, right? It certainly can. And that's the thing. You're betting against that. And I see what you're saying. You're like, Wayne, this is resistance. This is a weekly pivot. This is all kinds of things. Yeah, but that doesn't matter. The biggest thing on this chart right now, the most important, most powerful piece of information is this. Okay? So when you see something like that and it makes a higher high, I prefer you don't sell it. And you're like, well, Wayne, it hit a target. Okay, maybe it's a scalp, but I don't think so the way you described it. You're early, man. That's all. That's all. Right? Yeah, well, right? So, yeah, Alton says, I only have one reason to go short, and that was the right price. That is a good price, for sure. It's just the wrong time, probably. Okay? All right? Because what do moving averages tell us? Up and up. Okay, what does price action tell us? Up. What do fundamentals right now tell us? Up. And you're short. Okay? So, I don't really like it. Okay? That's all. Now, if we get a proper reversal pattern of these things, like for example, a 5-8 cross followed by a 21.55 cross, right? Which would indicate a newer series of, lower lows and lower highs. So you'd have to like recreate how this would happen. Well, we would have to have a low lower than this would be the first step. Okay? Then the second step would be here. Oh, man, that was supposed to be pink. Okay, here, and then the third step would be here, and I think go time, the best go time would be around here. Oh, you remember that from Daniel remembers everyone laughing because you sold Bitcoin at the top. Yeah, I mean, that's the idea, right? You don't want, first of all, I want you to remember the lesson. That's the most important thing. You don't want to be the only person doing anything. The whole point of what we do is figuring out what the market wants to do, not outsmarting the market. Okay? Okay, so cool. So we'll leave it at that. I mean, it probably looked good on a 5-minute chart or a 15-minute chart, and it probably was for a couple of hours. Okay, fine. But I prefer to scalp with the market, not against the market. I don't prefer to counter trend trade. Okay? Okay? Yeah, the Bitcoin stuff, I'm wondering if people do it because they see it after the fact and they say they have this fear, right? Fear of missing out. So they do the exact wrong thing. Why do they do the wrong thing? Why does fear of missing out make you do the wrong thing? No plan. So you jump in because you have no plan, but you missed it because you have no plan. Right? Have I made that point clear for you guys? But it's not greed. That's not greed. Greed would have been buying and buying and buying and buying all the way up. Yeah, it's right. You're the anti-prepper. There's no prep. You didn't see it coming because you didn't do the research. And then it happened and you're like, oh my God, if I had only done it. And then, because you didn't do any research, you buy it too high. Now, we don't know how high it's going to go, but I made it pretty clear yesterday. One thing for sure is the people that are trading this properly know the exact prices to be trading. So somebody is very astute in trading Bitcoin. They have no fear of missing out. You can't have a fear of missing out if you see it coming. Why did they see it coming and other people didn't see it coming? Well, they were prepared. They did the research. They did the technical and fundamental analysis, right? Which means they also know danger zones. Okay? So, for example, whoever bought this would buy this, in my opinion. Okay? And whoever bought this down here will not buy this up here. That's my opinion. I don't even know who they are. I don't even know if it's one person, 100 people, 1,000,000 people. I have no idea. But this is obvious and extremely logical, and therefore planned out in the future. Somebody said, not here, but here. So they don't have a fear of missing out. So people that don't plan. So what's the solution for FOMO? Yeah, having a plan. Well, what goes into a plan? Well, right, research both fundamentally and technically. So you say, you believe Bitcoin's going to go up because there's a risk on mood in the market. Very plain, right? Very plain, very fine. And since, did you notice it's since the stock market had risk on? Since the dollar had risk on, right? Newtonian physics, everything went up because everything was supposed to go up. Everything went up that's denominated in dollars, for example. Now, there's more to it than that because the dollar goes somewhere and then strengthens, right? So like you could have bought Bitcoin, risky, but we're in a risk on mode. You could have bought South African Rand, that's a risky currency, but we're in risk on mode. You could have bought oil, but it's risky. You could have bought gold. You could have bought the S&P 500. You could have bought the DAX. Okay? Because we find, right? So back in May, we discovered that holding cash in the form of USD is going to be a guaranteed loser for years and years and years and years and years. So if you're holding cash, you're a loser. Unless you're preparing to deploy. I'm actually holding a lot of cash right now, but I'm rotating. Rotation. So I'm rotating into new stuff. But holding cash is a guaranteed loser. Loser. Okay? So you got to rotate somewhere. And so if you started in May, then you're in this process, but then you don't have a fear. You don't have a fear of this. You don't have a fear of this. Remember S&P 500? I said it would go up or it would go up. That's pretty clear, right? Imagine now we're hanging out by a pool in some exotic location and there's a cocktail party and pretty people everywhere. And you say, hey, I hear you're like the investment guy. And I'm like, yeah, I am the investment guy. That's me. Right? My friends call me Wayne. You can call me sir. And he says, oh, hey, so what do you think is going to happen after the election in 2020? Do you think the stock market's going to go up or down? I'll say, well, that's a very good question. There's two things that are going to happen. One, if Trump wins the election, the stock market will go up. However, if Biden wins, the stock market will go up. Hey, look at that. Okay? No FOMO for me. Okay? So all of this stuff, there's planning and reason behind it. So you're not going to have a fear of missing out. What do you mean missing out? Like, even the idea of it. What do you mean missing out? What do you mean missing out? Because you're not doing your job? Because you're not at your desk? Because you're on vacation? Yeah, A fear of missing out is going on vacation and the market moves without you, which of course is a guarantee. I know for me, every time I go on vacation, the market moves. Doesn't matter when or where, it's going to move. Out of spite, I think. Okay? But outside of like being away from the markets for a while, there's no fear of missing out because your job, right? Your job is to be RWA, which is the counter to FOMO. No worries, Peter. Thanks for being here. You get that? If you are RWA, ready, willing, and able, then there is no FOMO. What do you mean FOMO? It's like stupid, right? Silly. What do you mean fear of missing out? Missing out. It's not even a plausible scenario. Like it's silly to me. Who the hell would have fear of missing out? So this group here, we are anti-FOMO. Why? Because every single day I show up to work with you to make sure you're ready, willing, and able to do what needs to get done. When COVID hit, I increased my service to FX Bootcamp clients by 500%, and I dropped the price by 80%. To ensure you were ready, willing, and able to at least survive the COVID crisis by staying focused, by always being ready, willing, and able, but maybe even thriving. And many, many, many of you, instead of having the horrible year that knocked you out of Forex, instead, for many of you, it's the best year ever, or at least a very satisfying global crisis. How many people are in that camp? It's either your best year ever or you're very satisfied with the outcome of 2020. Anybody so bold? Yeah? See, these people have no fear of missing out because the whole year, while the world was crashing, people very, very close to you, sick, dying, or died. Like this is the real deal here. And during all of this, at least you didn't suffer financially. Because we have enough to suffer through, right? If you're Buddhist, right, life is suffering. If you're a Buddhist trader, life is suffering, but it's a heck of a lot better when you have lots of money. I'm pretty sure that's Buddha. Okay? Yeah, Reb says it was very emotional. Well, how would you like to have had loved ones that are sick, or you're sick yourself, loved ones that have died, loved ones that have lost jobs and careers, and on top of that, you blow out your trading account? That would be life-changing too, right, Gary? That you lost your Forex career? Something that can change generations of your life and your family's life? Right? 100, maybe 200 years from now, they'll look back and say, before this was called Garyland, it was called St. Lucia. Wait, it was called St. Lucia? It wasn't always Garyland? No, it wasn't always Garyland. Yeah. So I'm glad that we were able to be hyper-focused. But I want you to make sure you understand the lesson that really occurred. It's not about making money, because you don't have much impact on that, because the markets determine how much money you're going to make, not how smart you are. This is not about being smart. It's about being ready, willing, and able. Right? And I feel bad, really. It must have been a horrible year for those that did suffer through FOMO. They're like, I need to be in the stock market, but my dad's sick. I need to be trading Forex, but my wife lost her job. I need to be doing, right? And instead you got through without that. Maybe you had some of that burden, but I hope as a community here through Forex.Today and through FX Bootcamp that we were able to, focus so that you could be ready, willing, and able to do whatever it needs to take care of your family. Right? Reb says it's very confusing to make money off tragedy. Don't think that's that way. That didn't happen. That making money off a tragedy would be like stealing the vaccine and selling it in the black market. That never happened. You didn't make money off of COVID. Okay? Billions and, trillions of dollars moved around the world in response to the pandemic. And this money needed to move, and you helped. I don't see it as you making money off of a tragedy. I think you help provide a solution. Okay? So don't confuse it, right? Oh, so you said your friend died and you had to give money to his funeral. Meanwhile, you're making money hand over fist. Well, your Forex trading didn't put him in the ground. Your Forex trading helped alleviate suffering that the family was going through. Okay? Remember, no matter how noble you are and what cause you care about, being poor is not going to make things better. Okay? Money doesn't buy you happiness, but it does alleviate suffering. Never forget that. It can alleviate your suffering, and it can alleviate the suffering of others. Yeah, heavy on the heart is fine, but make sure you're not, punishing yourself for what I don't believe to be true. Okay? So you need to change that psychology. Okay? Change your psychology. And so we simply, as a community here, we don't have a fear of missing out. And notice some of the other subtle lessons I give you. XRP jumps 400%. That's interesting. Why didn't I get all excited? Oh my God, we got to get on this. Go, 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 go. Because I wasn't ready, willing, right? I wasn't ready and willing. I was able, I suppose, but I wasn't ready, willing, and able to pull the trigger on that when it was 20. Peter contacted me, 5 or 6 emails. Hey, you need to buy it. You need to buy it. You need to buy it. I added the chart just because of Peter. Peter had the alpha. Peter made the money. That's his job. I can't catch everything, but I need to be an expert in something. I'm just not an expert in XRP. But I need to be an expert in something, and I am. And those are the things I'm going to be ready, willing, and able to do. And if something pops without me, I didn't expect it. So it's either a fluke, some sort of exogenous shock, or it's absolute fool's gold. Fool's gold. Fool's gold. Okay? Okay? Fool's gold. So the next time there's a tragedy in your life or to people that you care about or even to people you've never met and you want to help, it's great to have a fistful of dollars, a fistful of rand. Okay? To say, you need something, I got something here. So for example, back in during 9/11, the weekend after 9/11, I had tickets to go to New York with my girlfriend, and I was going to take her through her first trip to New York. I was going to show her the city, and on one of the evenings, maybe even the first evening, I had dinner reservations at Windows to the World on top of the World Trade Center, the top floor of the World Trade Center. This is less than 7 days after the terrorist attack. So we had American Airlines tickets, right? I wasn't a Delta guy yet because I was still living in San Francisco. And by the way, I lived on top of a skyscraper, so it was a little bit scary that day. So I call up American Airlines. I'm like, oh my God, people are trying to get back to New York. I have tickets to go to New York. I want to give up my tickets. And they're like, you want to cancel your tickets? I'm like, well, sort of. I mean, I want to make sure my seats are available for those that are trying to get back to their loved ones. There's no refund for your ticket. Do you know that? Look, all right, I get it. So it's, $1,000 I'm giving up, but I'm trying to give these tickets back, not because I'm canceling my trip per se, but I'm trying to make sure you make these seats available to someone that needs to get home. All right, so we're going to cancel your ticket. You're not going to get a refund. I'm like, okay, great. I don't need the refund. Actually, I needed it, but I wanted it. But anyways, but it's more like, I will give this up. I will give up the money so that somebody can sit on my seat. Now, I'm pretty sure American Airlines didn't give somebody free tickets. But that actually happened where I lost money so that they could sell tickets to somebody else. Kind of sucks. I haven't flown on American Airlines ever since because that's lame. But, right, there's ways to help. If you have a boatload of money, you can say, look, I don't have a lot of time. I don't really have expertise in any sort of direct way. I can't build you a water pump. I can't help you till your crops and your fields and stuff. But I got some money. Would that help? And that's the great thing about having money is it's easily transferable. Here, go buy yourself some food. Done. Okay? So, at the very least, get wealthy and then take care of the people you want to take care of. Cool. All right. All right, so Biddy, we'll leave it at that. Take a look. Okay. Oh, let's do this different color. Okay. Different times of day, different market opens. We're down here now. And you're supposed to be RWA on this at 7 o'clock in the morning, which is about this time. So if you were trading around here looking to sell, that's cool. Now we're down here, and it's a tricky situation because those that want to buy will buy it now. And those that wanted to sell sold it up here. And this is not a great price. I mean, it's 48, but besides that, there's more to life than that, right? Like, I don't know. I mean, it's not good. It's not bad. It's not great. It's a little slow. I think maybe a lot of this has to do with the market. So you have to decide whether you're going to buy it, is the question. Because if you were going to sell it, I think you already did it a couple hours ago. What's up, y'all? Okay. So you have to decide on that. If you're a bull, I see mediocrity. I see low volume and volatility today. You could do it, but I don't think it would be good. I don't think it'd be a good trade. No, in fact, no. So, yeah, if you were going to be a seller at 7 a.m., right? So I tell you guys, for oil, right? Can I confirm that? In the video where I teach you how to trade oil, I say you need to be at your chart, RWA, at 7 a.m. New York time. Is that correct? Yeah, I'll do that next, guys. Remember, you should be planning out not right this second. So we'll get there. I mean, you should already know pound dollar, but you're supposed to be setting up tomorrow. You have to appreciate that. It is correct, right? So this isn't a buy, I can tell you that. So a bear would take a shot off the bow. Okay. All right, so let's get everybody over to Pig Dog. Okay. So we'll do something simple. Okay. Okay. Oops, now I got to change this back. This is a buy yesterday. This would have been a buy today. I don't think you got the exact right price, but I think you got the up and the down on the London Open. And now you're up here. So this gets a little tricky. One of the things you would want to do is kick it off the 21. Kick it over here, baby pop. And the other thing is you're trying to like catch this roll reversal. It's a little dangerous because we're already super elevated. So like doing something now is extremely late. So like when I said about tomorrow, right, you need to be thinking about this period, and that inside this period, you should probably think about, you know, something more like this. In the next 12 hours, you probably want to buy a dip. We're getting closer and closer to a risk zone, okay? So that's troublesome trucks. So right now, you're buying it too close to resistance, in my opinion. The only thing you might have going on here is scalping this at the market open, right? Okay, that's not a lot. Like if all you saw was this, it's tradable, but okay. So I'm going to change this now, and I'm going to go and look at it from a confluence point of view, back out a little bit. Okay, and now do you see? Right, somebody's buying this. Extremely bad price. So I go back to what I showed you earlier on the smaller time frames. There was a trade here yesterday. and maybe a second chance somewhere in here. Okay. But getting involved up here, it doesn't seem like the right price to be buying. Can you see that now, guys? Okay. So this will probably, if it were to continue, up. So life experience kind of shows me it'll do like this. Okay? And we'll reverse engineer this. Meaning, typically you would buy here and exit here. But in this case, you would, right? Instead of the bottom predicting the top would predict the bottom. Okay? So we ride this up, we hesitate, we ride it up, and then we bring it back down and reverse engineer it so it comes back down to 134. Okay? Which is a 500 pip drop. You mean USD down or USD pairs down? It sounds like you have it backwards, but yeah, but then, so you're saying stimulus would strengthen the US dollar. Is that what you're saying? Yeah, that would be wrong. Okay? Stimulus, let me be clear, weakens the USD. Another way of saying it is dollar down. Okay? So you might have worded it perfectly, but been 100% wrong. Okay? Now, here's the interesting thing. I've explained very clearly over the last several weeks that I do expect, and I am preparing for US dollar strength. And the weirdest thing ever is you might see it and say, ha ha ha, that's because of stimulus. No, it's not. Okay. So I can do a quickie. Let's do a quickie here. Okay, so we'll start with this. Y, which is GDP. I guess I should just do it. GDP, come on, Wayne. Keep it simple. All right, GDP is equal to C plus I plus G plus X minus M. Okay, so stimulus means money from the government goes up. Dollars, not productivity, we'll say dollars. Okay, the government spends money and gives it to consumers to consume stuff. Okay, so it's not really GDP anymore. What we're kind of talking about is money supply to, right? If the government creates money or borrows money and then gives it to consumers to spend, then GDP goes up because then they spend something. Okay, so anyways, based on that, money supply has increased. There wasn't this money before. The government either prints it or borrows it from somebody else, but now there's more dollars in the economy. So now we have to do a money supply. And we'll do dollar purchasing power. Okay, so you got the value of the dollar, or let's just put dollar. That might be easier. Okay, not the price or the value. We'll just call it dollar. Okay, that's the purchasing power of a dollar, and then the quantity of dollars available in the economy, and we know it just went up. So we have to move. Let me ask you, which curve do we have to shift? The demand curve or the supply curve? The supply, the number of dollars in the United States will go up because of a stimulus package. So we have to shift the supply curve from supply 1 to supply 2. Because now we have a new quantity. See, the quantity of money has increased. So we can call this 1 trillion, 2 trillion, 3 trillion. So it went from 4 trillion to 5 trillion, whatever. Whatever quantity, make up your quantity. But quantity has increased. But what happened to the purchasing power of every dollar? PP2 has dropped. Okay? So Echo says, oh, well, the dollar will increase when the government issues checks, stimulus checks. No, wrong. That's wrong. Okay, that's wrong. In particular now, you can say, well, this represents an open economy for a reserve currency. Okay, so this is very specific. The United States is an open economy, and it's a reserve currency. Which means Americans, if the government increases their money, then consumers will increase their consumption. And it just happens that most consumption in an open reserve currency, or open reserve economy, buys more stuff from foreigners. Why? Because of the difference in standard of living, right? For example, you can pay someone in China or Vietnam or Malaysia less money than an American worker. So when consumption goes up, okay, now you got to shift this over again. Consumption goes up, but what are we actually shifting then? Most of it is going to be imports. So if we're importing products because we buy stuff from Walmart, because we buy stuff on Amazon.com, but the stuff isn't American made, it's foreigner made. So we're importing stuff, but we're exporting dollars. And if you do the same analysis now, the same chart, but the quantity of dollars in the interbanking system versus the purchasing power relative to the other domestic currencies, you will get the same result. The quantity of dollars in the interbanking system has gone up because we've been sending money into the interbanking system and importing products. So we've exported dollars into the interbanking system to buy South Korean won, and then with the South Korean won, we buy a Samsung TV. Okay? So we exported money and we got TVs. So the quantity of the money in the world has gone up, in this case dollars, but the quantity of televisions available in the television market has gone down 1 unit. There's one less TV, but now there's more dollars because now the dollars are floating in the interbanking system, but there's less won. So South Korean currency has gone up in value. There's one less unit of Samsung televisions, but the quantity of US dollars has gone up. Therefore, the purchasing power relative to, in this case, the South Korean won, has actually gone down. So this is my 10-minute response to Echo saying, hey, if stimulus checks go up, the dollar will get strong. Wrong. Okay? Wrong. You don't get the foreign exchange part. You're trading this like it's a stock. It's wrong. Okay? The first part of it, spending goes up from the government. Then, therefore, C goes up, therefore, M goes up, and X goes down. Anyways. Cool, right? See how simple that is? Greg says BOJ doesn't like USD yen at this level. You know, I've been doing this for like 20 years now. The Bank of Japan never likes the value of the USD yen, ever. I'm telling you, I've been through periods where like the USD yen's too high and then the USD yen's too low. And honestly, I've been through it all. Right? Central banks have personalities, and it's pretty interesting. Japan always complains about the value of the USD yen. What they're trying to say is no matter what they do, they can't control the value of the Japanese yen. There's other forces in the world that do it. Same thing with euro. The ECB has very little influence over the value of the euro. Okay? They're spending hundreds of billions of euros a month to bring this currency down. Every month, hundreds of billions to make this go down. Ha ha! ECB is doing everything they can do to bring this down. And they can't do a damn thing about it. Leo, I is investment. So the way I break down GDP, and by the way, I'm going to put this in the macroeconomics course, so you're getting a taste, but C plus I plus G, okay? I simplify this. Now, you can make it as complicated as you want, but I say this is consumer spending, this is businesses spending, and this is government spending. So the government creates a budget, right, at the beginning of the year. Okay? They're going to spend that. That's what they're going to spend. They never spend less, and they usually spend more, but there's a budget. And so we know what G is. So G, you could say G prime, meaning G is fixed. Okay? Now, consumers are going to spend. Do businesses spend? They do spend, but what do they do? How do businesses spend? Well, they invest. Okay? Now, in reality, you can break this down and say, you can further define this, and it's not just businesses now, but you can say, okay, this is business consumption. So we'll put this business consumption, but you could also have consumer or retail is what they say. We'll call it, well, I'll just write retail. Retail, real estate. Okay? It's sort of like there's consumption now, but some consumption is durable goods, and some are non-durable goods. right? So you can split consumption, and you could argue that durable goods are a form of investment. You don't buy a refrigerator at the checkout line at Walmart. You're like, oh, look at that. Let's just get a refrigerator. Boom, throw it in the cart. Right? So you got non-durable goods and durable goods. Durable goods are closer to an investment because they have a longer shelf life. Investment you can break into components like businesses building inventory, okay? Businesses building a new factory, businesses repairing or replacing used equipment, okay? That kind of stuff. But also, if you buy a house, that's an investment, and that gets thrown in there. But, we can make subcomponents of subcomponents, and I can make this as confusing as you want, right? What I'm saying, I like to make it simple. These are, right? So I say GDP, equals consumers plus business investment plus the government. Okay? Plus net exports. Okay? Okay. Okay? Ben says investors. No, not investors. Businesses. Okay? Businesses do not consume. Businesses are not real people. Okay? They are entities. Okay? But they're accounted for as investment. Okay? Cool. Look at WTI. It's Oscar Mike now? Yeah. Told you. Like, yeah, this is a sell up here. You could buy it at 48, but I don't know. It's not very good. Well, there you go. You're welcome. You're welcome. Just like that. I knew my spidey senses were tingling. Bum 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 bum. Come on now, touch me, baby. Can't you see that I am not afraid? What was that promise that you made? Yeah, this is wowzer. Wow. That's a big... That really sets up something here. Let's dive into this. Wow. All right. Kicking off the R. Down, 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 down. Right off the bat, what do you see? All right. Lower low. Sets up lower high. Lower low. Sets up lower high. Lower low. Sets up lower high. Lower low. Sits up lower high, lower low. Sits up lower high, and then a new lower low. Cool. So are you going to do one of these or not? When do you think we can figure out what the market's going to do? You don't know what the market's going to do? Then you shouldn't invest. Okay? Okay? So it's really that simple. You don't know what it's going to do? You have no idea. Then you shouldn't invest. You shouldn't trade. Yeah, and I'm not being facetious. I'm being blunt. If you have no idea, then I don't know what your basis of trading is for. Okay? But look at this. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, sell. Down, 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 up, sell. Down, 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 down. So you're either a buyer, right? You're either a buyer now or you're a seller now, but not at this price, at that price. Okay? Now, I think a buyer probably should be a little more patient and wait for a higher high, higher low. Just like this. Lower low, lower high, right? But as a seller, I mean, you're either going to do that or you don't know how to trade. Because that is basic. That is basic price action. Right? Right? Price action. This is elementary. You need to know this stuff is another way of saying it. You have to know this stuff. Okay? If you only knew one thing, you'd have to know price action. Because if you know everything but price action, I doubt you'll be successful. You certainly won't be consistent. Okay? Now the next thing is identifying resistance and support. Okay? Now here's the interesting thing. This is resistance and this is support. It's not a question, it's a definition. Okay? Yeah, Chemical, did you join FX Bootcamp? So, one of the things I'm planning for and will be ready, willing, and able for next week, for example, is for this CAD yen to come down. I said very clearly I didn't want to front run it and just throw down trades because of that. Okay, you understand that? So I'm not short this, but I'm eyes wide open. Okay? So next week, if something like this happens, I will be on it. I have the choice right now to front run it and say, hey, it's the day before the last day, why don't you just get in on it? I could. This looks pretty good. In fact, I like it better on the higher time frame. This is what got me all excited. Okay? This now looks like, well, this predicts an inside week, and then that would probably get me something like this next week. Okay? So the thing is, the way I look at it is we're still kind of like in something like this. I know it's not quite parallel, it's close. So we're close to this. And what I would prefer if I were me is this next week. And then I'd probably take the shot. Why, technically? No, actually not why, technically. Why seasonality? It's not that this tells me, it's that I told you up here to exit, right? And this area up here was the exit. This was the holiday week of, I don't know, you should be radically crazy conservative. Also, this is clearly an OOP to a CT, right? And then here we are returning. So if we're resuming this downtrend, and I think on seasonality, it's reasonable to assume Japanese yen strength in the first few weeks of January, well, then I will take the shot, not because of this, not because of the pattern, not because of this is an amazing pivot point, not because it broke out, only because I expected it to. Now, I could expect it to do it, And then if it does do it, I can tell myself I'm right. But even that's a fallacy, because we were talking to, who was it that said the dollar would be strong because of the stimulus? And then all of a sudden the dollar gets strong and he could say, oh, because that's the stimulus. Well, that would still be self-confirmation, right? Which is still good. I'm still okay with that. I mean, I have proven that it's wrong. But if you have a bias, and the bias is a form of opinion, and so someone comes along and says, well, because of the stimulus, the CAD yen's going to fall, and so it falls, and that person's on the trade, they might be 1,000% wrong, but they did the right thing, and that's all that matters. And I can't tell you really, I mean, I can. I can prove to you because I have the background, but ultimately, I don't know what the future is. You don't know what the future is. You can come up with your opinion and analysis and best guesswork of what the future is going to be like, and for whatever reason why, right? You expect the dollar to gain strength because you believe, I don't know, spaceships are going to land, and the dollar gets strong. You're like, they must have landed. Look, dude, as long as you're buying dollar at the right price and the right time because of your opinion or your bias, again, having one meant you were ready, willing, and able for that particular outcome. And then because you're RWA, you took the trade. And it doesn't even matter if your investment theory was correct. What matters is you took the trade. So you might have bought dollar and dollar got strong and you thought it was because the mothership was returning to Earth. But it might have just been business taxation issues. Who's to say? Who's to say? It doesn't matter, right? So I'll take someone's opinion, and if they back it all up, that's great. It means they're going to be ready, willing, and able to do something. And hopefully they have the strength and fortitude to do it, or do not it. Okay? So if you think the dollar is going to get strong next week because of the stimulus package, great, good. Set it up, bro. Knock it down. I totally disagree with your reasoning, but if I think the dollar is going to get strong on seasonality because of taxation issues, cool. But it might just because something else. Like, I don't know. As long as we're both making money, it doesn't really matter. And here's the big thing. For you newer guys, you need to think about this. Once you know how to trade, and probably the biggest challenge you have right now is you have no idea how to trade. And you don't even know why you should be trading, yet alone how to do it properly. But look, you can get past that. It's called education and experience. It's not a big deal. Okay? You can get there. But what you will find is Forex is not a zero-sum game. Okay? That's for losers. Okay? That's for people that get caught in the middle because they have no idea what the hell they're doing. Okay? Forex is a dance between the bulls and the bears. Okay? If you know how to dance, then this is going to work out really, really well. For example, right? If I move 1 foot forward, you probably move the next foot back, and we can dance to the music, and we can share a chemistry. Left, left, right, back, kick. Left, right, back, kick. Left, right, back, kick. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. Right? 1, 2, 2, 2. 1 tap, tap, tap. Slide. 1 tap, tap, tap. Slide. 1 tap, tap, tap. Slide. Right? And off we go. we work together. Okay? And when you are able to work together, it's beautiful. Okay? And what will happen is you can anticipate, okay, this, for example. In my training course, it is 1,000 million times clear, because you are taught very clearly that this means all the bears are going to go out and there's going to be a counter trend trade. There's no doubt. It's not like, oh, it might do this, it might do that. No, that means the market's going to do this. Okay? Does it mean up? No, it just means out. Okay? And what you'll find is bulls and bears work together. And here's the point I'm trying to make. So maybe write this down. If you know how to trade properly, meaning you've decided you're a bull or a bear. Once you've made that decision, we call that bias. That means you have to have your big girl panties on, right? You're an adult now making decisions. You're not a dog chasing its tail, okay? And as an adult, you say you're a bull on cat or you're a bull on yen, one of the two, right? Great. So you've decided up or down. Now the interesting thing is, regardless of your decision, you are likely to make money. It's not zero-sum game. You don't have to be smarter than me to make money against me. Okay? You need to trade properly. Being right or wrong is irrelevant in this game. Okay? If you screw up, you get your foot stepped on. That's the reality. If you're losing money consistently, it's because you're a bloody mess. You're stepping on other people's toes. They're stepping on you. You're putting a right foot forward when it should be a right foot back. Like, what the hell are you doing? You're ruining the dance. So I want you to think, if you know, right? If you know the process, you will make money. Now, how much money will you make? Oh, Samil. How much money will you make? Well, now it comes down to whether your bias is correct. If your bias is correct, you'll make more money. If your bias is correct, you will make less money. And typically, because of things like seasonality and business cycles, there's an ebb and flow. There will be periods through the year where you make more money and periods through the year where you make less money, but you'll consistently make money. Not every trade, but most trades, most of the time. And when your bias is correct, your trade will run. It'll be worth more. You'll be in it for 3 weeks instead of 3 hours. And then when your bias is incorrect, or just the wrong time of the year for that, you will do less well. You'll day trade instead of swing trade. That's all. Right? So let's take a look. This is a bullish buy. Okay, we'll put a buy. This is a bullish buy, and 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 this is a bullish buy. Can everybody? How many people here have taken the swing trading course at FX Bootcamp? Would you agree that these are all bullish buys? This is a counter trend, but otherwise they're all basic setups, right? I guess I should label this one on the other side. Right? Very standard. If you don't know this, maybe this is your problem. Okay? But I can fix you. Okay? Cool. Now, potential sell, potential sell. Okay? Right in here is the sell zone. Front run sell for sure. And this is the first sell. Okay? So this is a counter trend sell. It only worked for 3 days. This is a counter trend sell. It only worked for 3 days. This one, I hesitate because it's not, no, I'm going to say no on that one. But this is very clearly the sell zone. This is very clearly the sell zone. This one, you sold it, and 24 hours later, you probably got knocked out of break even. Okay, and you might try again here. And if that works, you're going to try again here. Okay? And what you'll find out is bulls made money, bulls made money, bulls made money. Bulls were in it for a while and broke out, got knocked out of break even. Bulls made money. Bulls were in it for a couple of days and are probably going to get knocked out of break even. And bears made money for a few days. Not a big money. It's counter trend. Again, bears made money for a couple of days. Not big money because it's a counter trend. Then finally, the trend seems to have reversed now that bears are making big money. And then all the bears exited and the bulls went. And now we're moving sideways because this is the real issue that's going on right in here. And at the end of the day, of all this period, since November to now, if you were simply a bull, you would have made money. If you were simply a bear, you would have made money. And in fact, probably about the same amount of money. And if you don't know what you're doing, right, you're somewhere in between. You're just a big pile of gobbledygoo. Just a big pile of gobbledygoo. And the thing is, you're stepping on your own feet. You're stepping on your own feet. And ultimately, I think most bulls and bears, right? I think most bulls and bears here, like institutional investors and stuff, they don't even see you. They don't even see you. They don't see your pain. They don't perceive your pain. They don't care about you because you don't exist. What's happening is amateur bulls are transferring their wealth to amateur bears, who then transfer their wealth back to amateur bulls, who then transfer their wealth to, and what's happening is all these little retail traders are going in circles, losing money to each other. And they can't even answer a basic question. Are you bullish on CAD yen or bearish on CAD yen? I don't know. But my toes are a bloody mess. And I'm bleeding all over the floor. And it hurts to trade. Well, maybe you don't know how to dance. Maybe you should take some dance lessons. Huh? What do you think? Take some dance lessons, maybe? Do you want to dance like a Canadian girl or like a Cuban girl? You want to dance like a Canadian boy or a Cuban boy? Yeah. Canadians, I think it's against the law to dance well. I'm pretty sure it's against the law. Canadians are so funny. You hang out with your buddy, you're just like, hey, dude, like, Canadians have been practicing social distancing for hundreds of years. Like, you can't get within 6 foot of another Canadian. Like, whoa, 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 dude. Whoa, you're in my space. Yeah. Canadians are funny, I think. Right? You ever watch, Canadians hug? They're like, awkward. They're like, they pull away when they hug. They're like, huh, hey. Yeah, take off, hoser. Maybe Canada's changed. Maybe Canadians are now touchy-feeling, right? Maybe Canadian men sit around the table talking about their feelings, but not when I lived in Canada. All right. Yeah, the day before the last day, huh? Ballroom dancing with the British girl. I've always wanted to go to Austria. The royal family throws a waltzing party, I think once a year, and you dress up, and it's a real deal waltzing festival in a castle with royalty, and they're dressed up in the fancy costumes, and there's horse-drawn carriages and stuff. I'm like, that sounds really cool. How hot does Canada get? Over 40 Celsius. Right? You're also talking about the second largest country in the world, so it depends, of course. Reb had an amazing time in the TO. Yeah, expensive though. Any other requests? Man, I'm really dying to travel again. And I even talked to my wife. I'm like, when do you think I can travel again? And then I heard this morning that a congressman, he won in November, right? He won election in November, his first election. And he gets elected to Congress, in the United States Congress, House of Representatives. Wow, what an amazing time in your life, huh? This was in late November, or I was early November, I guess, right? The election. And he died last night of COVID. Never got sworn in. Then I'm like, oh, and get this, guys, he was 41. Oh. So I'm like, yeah, okay. There goes that. I'm not interested in traveling anymore. I go, oh, man. So I feel bad for him. I guess it just hits home. I mean, I know many of you have had COVID. I know many of your loved ones have had COVID. I know a few of you have suffered losses because of COVID. That one hits home for some reason. I don't know. I can imagine how excited, right? I just have this sense of being excited that you won this victory. And by the way, when I was the leader of a nonprofit organization, I had to be elected. I had to campaign, right? And I had to go through caucuses, and I had to have backdoor meetings and side deals, and I had to have a whole support team. I mean, I won because of my support team, not because of me. So I know what it's like. I mean, honestly, it was one of the hardest things I've ever done in my life, probably ever will be. I remember I had I had like not lockjaw. I had my face was physically worn out. I don't know how to say it. Like, you know how you feel when you go to the gym and you lift weights too much and all of a sudden you're just like, oh my God, you're just filled with lactic acid and you're like, oh my God, my arms, my chest are just screaming. My face was like that because I'd gone over a week just constantly smiling. Just constant, hey, good to see you guys. Let's talk for 20 minutes, right? Just days and days and days and days and days of just unbelievable pressure. And then I remember winning and what that would have felt like. And then I had achieved this goal and got to this dream. I got to the board of directors, right? And how exciting that was and how hard I had worked and how much I looked forward to it. And then, so here he is, he's 41, he gets elected to the United States Congress. And then he gets sick and dies. You're like, oh my gosh. So it just, I don't know, for some reason, it just hit home. Steve spent a month in ICU. Yeah. Well, yeah, praise the Lord, yeah. Allah Akbar. Yeah, well, yeah. Thanks for not dying, Steve. JP's literally lifting weights right now. Yeah. Okay. So anyways, Rookie says, rich man, poor man, we all die in the same grave. In that case, you should quote Shakespeare. You could be a king or a street sweeper, but everyone dances with the Grim Reaper. Yeah. Okay. A month in ICU is not a small amount of time. Ben's in Saudi. Right? There's also Dubai Ben. I haven't talked to that guy in years and years and years. Met with him probably 10 years ago. Dubai Ben, another great guy. So we got to get the Bens together. You come in from Riyadh, he comes in from Dubai. I'll meet you in Abu Dhabi. Going to Kuwait soon? Very cool. Kuwait's neat. Not far from Basra. We're going to party in Basra, in Sumar. Party like some good Samaritans. All right, let's just kind of look over here. Yeah, these are all just sort of, they're doing the thing. Velocity seems to be slowing down, right? Lower highs and higher lows, so to speak. Like the lows are bigger lows and the highs are slightly high, right? So I'm just being cautious. Again, I'm very aware that likely even wrong for next year, but I still have to do what's right. So part of the things I taught you as far as December, right, is in this period, you should be exiting the market. I hope you appreciate that. Like, you know when to walk away, and no matter what happens, you haven't given up much. Or to say it another way, you could have worked for 2.5 weeks, and if you were perfect, nothing happened, or you made a little bit of money, or you did something wrong and gave away money when the markets are thin. Right? Right? Like, this is the December Fed meeting, right? No, it's here, isn't it? In here, it's a Friday. So this would have been the meeting, I think, then, if that's a Friday. So yeah, literally. So imagine you didn't work. You took all your risk off the table. Okay? How much did you give up? And now we're talking about this much. But of course, we could have been down here just as much, right? How many people will focus more next year on my time-based exit strategy? How many people next year will spend a lot more time focusing on a time-based exit instead of a price-based exit? Okay? So there's the meeting. But what was the other date? I said we want to hang on maybe as long as the 19th, right? And the 19th is here. There we go. Time-based. And we knew this not just in November, but in August. That somewhere between this Fed meeting and this date here, you want to be out of the market completely. And remember, I challenged you back in the summer to have at least 30 trades open going into this period. And when we get to here, you will exit all 30 trades. How many people can confirm that? Back in June, July, and August. That the trick, now it's going to be difficult because of the political year, but the idea is that you try, and if not the political year, then you say, well, it's because of the political year, but next year I'll try, or the year after that I'll try, or the year after that I'll try. But imagine the conviction now that you should try for this, but no matter what happens, right? Remember, the only way to get 30 trades open is leave them open for weeks and weeks and weeks, maybe months, right? That's how you do it, right? Weeks and weeks, months and months, but no matter what happens, somewhere in this pink box, you will exit. And even with stimulus package, it's only gone up, so 78.50, it's only gone 50 pips. You could have taken 2 weeks off, and all you gave up was 50 pips. Okay, that's a morning's worth of trading for 2 weeks off. That's like going to your boss and saying, hey, boss, can I have 2 weeks of paid vacation? They're like, yeah, but only if you pay me $20. They're like, $20. I can have 2 weeks off of paid vacation. Yeah, slip me a 20. Get me a Jackson. All right, fine. All right, here's $20. Good. Right? Reb says still struggling with that. Well, it takes years. You don't have my confidence, right? Experience will change that. Or it won't, depending on what your experience is. Ron only had 16 open trades. Ron. That's actually pretty good, considering. Now, most of them were what? November trades, right? Or did you get some in the summer? I mean, that would be the most ultimate one. I think Ray, right? I think Ray was pretty close to 30. And he held, I think, since April. Yeah, that's what I thought. Yeah, that makes sense to me, Ron. Probably first week, right? There was a beautiful front run on election month, right? Ray was killing on Rand. Yeah. And the cool thing about the rand is he's picking up the interest, and of course that makes an even better experience. Like it makes a different point. It makes a different point. It's interesting, right? Quantum computers. I don't know about AI. Quantum computers. I can't even fathom what a quantum computer can do yet. But I would say I would disagree, because let me try to get my thought process out here. You're like with the idea of AI, for example. You're suggesting that AI can make decisions more quickly and therefore beat the system. Because the system is comprised of humans. I look at it differently. So let's put it that way. I look at Forex as the ebb and flow of global trade. It's people doing business with people. It's literally a market. It's like going to a bazaar and there are people out selling their wares and a crowd going through, and you're exchanging. Here's some gold coins, give me some bread. Here's some gold coins, give me some clothes, that kind of stuff. And it's truly just an exchange. Like beat what? There's nothing to beat. Someone is sending money to another country. There's nothing to beat. Now, could you ride that? Yeah. But what do you mean replaced? Right? You're losing the logic of what the foreign exchange market does. There isn't anything to beat. It just is. So when there's lots of business and trading activity, there's a lot of money crossing borders, and this creates supply and demand. It's truly a marketplace. And when there's not much business activity, then there's less demand, right? There's less activity, and there's less money flowing over borders, and there's just less. So if you think of, again, Machiavelli is a great example of this. If you think of Machiavelli's Italy, of course it wasn't Italy at the time, but if you think of all the kingdoms on the Italian peninsula, and there are all these little kingdoms, and they all had closed borders, there was very little exchange of products and services, and therefore, there was no foreign exchange of money. Okay? And it's a closed border. So, I don't know how much the North Korean currency changes in value, but since it's a closed economy, what do you mean? There is no foreign exchange. Therefore, there's no change in value, because there has to be relative to what? So now they might have local inflation, but it wouldn't be, right, it's not the same. So going back to the question, will AI replace retail traders? No. I have sat here for 20 years, and, I think the amount of market participants in my industry now has gone up 300%. And the one thing that's consistently happened is the market has become smoother and smoother and smoother and much more predictable. So will retail traders get replaced by AI? I think what will happen is, but it hasn't happened yet, but I'm surprised at people that just don't know what they're doing, that just throw money at the market and they lose it. I don't know why they just don't go on to Bitcoin and lose their money there, and then go on to options, lose their money there, and then I don't know, do something else. Right? But people tend to stick with Forex. For example, I don't know why there's so many scam artists and scumbags on YouTube that do Forex. Why? Why is Forex unique? What makes it, I don't understand. But if they all disappear, it wouldn't matter to me. If they all got replaced by AI, good. Less crap to watch on YouTube. But does it impact me in the market? No. right? So maybe there's a different way to look at your question. Will banks and hedge funds rely more on artificial intelligence to make better decisions? Yeah. Will that replace retail Forex traders? No, look, they're happy to lose money against me versus an AI machine. Who cares? Right? Someone just throws money at a Forex account and tries to get rich quick. He doesn't know anything about me. He doesn't know anything about AI. He doesn't know anything about anything, especially the person on the other side of the trade. So they just no. But will AI be used more broadly as some sort of analysis tool? Yeah, why not? High frequency trading? Yeah, what do I think about it? Sounds cool to me. I don't know if it exists as much as it used to. Most of the flaws and inefficiencies have been fixed. But I think, what is it called? Flyboys? It's an interesting book. Maybe you want to read that one. But a lot of it was criminal. So you're like, well, how do I think about that? I don't like that. But all of that's different now. So if you're using a data set and some algos, which you could call AI, you could say, okay, look for scenarios where 80% of the S&P 500 stocks are red at the same time. And in that scenario, sell everything hard for 3 minutes. What do I think about that? Well, if 80% of the time it makes money every time, they should probably do it. Okay? Now, the beginning of high frequency trading had to do with lying to people. Of course, I don't like that, right? Olin says, isn't that more of quant trading? Yeah, and that's, I think, where that's moving toward, but there has to be a high frequency component to it if they're willing to do the trade in a millisecond. So they would have to program that. So there's a high frequency to that. The old high frequency would be, and so I don't think this exists anymore, but you look at New York City, and there's a bank here and a bank here. This one's A and B, Bank A and Bank of America and Bank of Bermuda. I don't know, and right, and they're across the street. This is downtown, so I don't know, Wall Street. Yeah, Wall Street. Okay, that's supposed to be Wall. Can't see it. Anyways, okay, they're across the street in Wall Street. Now, they have phone lines and computer lines hooked up to communicate. Now, because the phone lines are plugged in at 1900, 100 years ago, for some reason, banks on this one, so let's say this is the phone exchange now. Literally a telephone exchange. Okay, this is a telephone, old school telephone. Bank A is wired like this. Bank B is wired like this. No joke. So someone comes along and says, if I look at orders and I can see this one takes, 1 millisecond, and this one takes 28 milliseconds, I know who it is. 28 millisecond orders are Bank B. Interesting. Then the order comes in right? So this is just them placing orders across the copper. How much copper between you and then the phone exchange. Now, then the next thing is then they send it across to New Jersey. So what is it over there? Bats? So now it goes to Bats. And at that time, computer programmers said they created a process to help sort of fill best orders, and there was ways to like at what price did the order, or first come first serve, and how do you handle big orders versus little orders. And they started coming up with computer programs to like try to best settle trades. And then people figured out how it worked so that they can then cheat or at least ping. So they realized something like, what if you put in a big order? How much of it gets filled at this exchange before it goes to the next exchange? And the next exchange would be something else. I don't know. Exchange number 2, whatever. It could be in Chicago. Okay? So what they tried to do is, first of all, a high-frequency trader would insert themselves somewhere along this line, figure out orders, and knowing if it's Bank B, it could be 10,000 shares of something because they don't make trades any smaller than that. So they're like, let this one go. Bank A maybe is smaller. Okay? So Bank A sends a trade. Don't worry, don't worry, don't worry, don't worry. And then a big order comes from Bank B, and they're like, it's Bank B. And then they say, what is it? Okay? Right? And somehow they ping this one to partially, right? And then they ping this one. And I forget the logic. I'd have to think about it. It's been a while. But they're able to like front run, right? So they can buy all of this. And now this order gets here, because remember, they're 1/1,000,000th of a second ahead of this order coming through. This says buy 10,000 shares. This says buy 10, buy 10, buy 10, buy 10, buy 10. So 1/1,000,000th of a second before bank order B to buy 10,000 shares comes in, they buy 10,000 shares. So now it skips to the next one, and they're selling 10,000 shares here. And it's all like 1/1,000,000th of a second. So they know Bank B is put in a giant block order to buy Apple computer. So they get 1/1,000,000th of a second, buy it 10,000 shares of Apple, buy everything on the Bats. Bats is empty. Bats sends the order to the next one, and then they dump the whole thing on top of Bank B, buying it here at a slightly higher price. And so it's only 10,000 shares, and so you're only picking up pennies. So they only make, even though they put up millions of dollars, for 1/1,000,000th of a second, maybe they make 10 grand. But they do it 40 times a day, and they never lose money. Because they only buy when they know 1/1,000,000th of a second behind them, there's a buyer, so they buy up everything and then sell it to them on the other exchange. So what do I think about that? Well, that's shitty. But of course, they made unbelievable amounts of money. And, right, so then there was a race. How close can you get connected to Bats, and how close can you connect here so you can figure out these orders and figure it all out and trade it, because then someone else got in 2/1,000,000th of a second faster than your 1/1,000,000th of a second. Right? And all of a sudden it was high frequency against high frequency. So you had to be closer to the exchange and all this kind of stuff and all that. But I would equate it to insider trading. Okay? Now, the cool thing is, like the New York Stock Exchange, for example, figured out what was happening. What do you think the New York Stock Exchange figured out? What do you think they did when they figured it out? What was happening? All this was being front run. Hans has banned them. Everyone gets the same length of cable. Olin. So it's fair for everybody. Regulation? Leverage? Shoot, no. They charge more money to have less fiber, to be closer to the exchange. They're like, do you want to have a server sitting on the exchange? Well, it's $10 million a month, or whatever it is. They charged for the access because they realized if you're making $100 million a month stealing from legitimate investors, then you need to pay us some serious money. And that's what they did. Charge them for better access. They provided it. It's like saying, we know the bank. We know when the bank's going to be full of money. We'll get you all the guns. We'll turn off all the cameras, and we'll supply you with a getaway car full of police radios. And for this, we will charge you a fee. Nice! They provided it as a bundled service for millions and millions of dollars a month to host your server. Oh, faux show. Okay. So anyways, if you like stories like that, I think it's Flyboys you want to read. I don't think it'll be on our reading list, but Amazon.com. I think it's called Flyboys, right? So you will find, oops, is that right? Flyboys? No, I guess that's not the name of it. Does anyone know it? It's got a red cover on it. There's some amazing stories of what they did to build these systems. Flash Boys. Thank you. Because what they would do is they would flash the order and suck you in. Yeah, Michael Lewis. So, like, for example, they would say, hey, bank number B, you need some Apple? We have some Apple shares over here. So they would flash it on the screen. And what would happen is the order would be routed to that broker or to that exchange. And then it turned out there was only one share. But they were able to route it there and then suddenly buy the other 9,999 Apple shares and then throw it on the other exchange so that it would be routed to that one. And they would suck it in here and spit it out there all in a millionth of a second and you know, just amazing. So, like, I think this is the book where Michael Lewis talks about, I think it's Renaissance. And they're like, after looking at 8 years of trading at Renaissance, there was like 6 million trades that they did, and they never had a loss. And you're like, you did 6 million trades over the course of 6 years and you never lost even one trade? No, we're really lucky. You're like, oy vey, just printing money, right? Yeah, well, because they were stealing. Right? Insider trading. They only traded when they knew there was an order that they can get in front of. Okay? So anyways, yeah, this one. But, you know, these are longer books and stuff.
The workers were told only what they needed to know.
My speaker's not hooked up. Anyways, right? Interesting information. Are you guys happy we talked about high frequency trading today? Was that new and interesting to you? Just wondering, hopefully I just didn't waste your morning. Cool. Reb's going to order the book now. Oh, there you go. It gets drawn out and tedious, I think, though, Reb. But it's fine. Michael Lewis is detailed. So imagine you had to read about like 10 different stories about different aspects of it. And so I'm not recommending it, but I'm just saying, you know. Okay. Interesting. Well, I'm glad to share my years of experience with all y'all. But is high frequency trading as well? See, there's no exchange, right, Olin? So I teach you how to front run, and I teach you how to stop hunt. Okay? I can't see the orders. I don't have level 3 ladders and all that kind of stuff. But I can tell you, when I was on the in the trading pit for the 10-year T-note, he showed me all the flash orders. That's where the name Flash Boys come from. He's like, look at all these orders on the screen, because they trade. That's how they trade. They trade on volume, right? And he's like, none of it is there. He's like, none of it's real. The whole ladder is just filled with orders. He's like, none of it's real. So, interesting, right? But because I know how to trade, and this is the most important thing, there's no secret. There's no magic indicator. There's nothing that you're really missing. If you know how to trade, you will know where bulls will buy and you will know where bears will sell. Why? It's obvious. That's you buy low and you sell high, and you should be able to look at a chart and say, it's generally up. I guess it's an uptrend, right? So it shouldn't be complicated where the bulls would buy and where the bears would sell. And that's it. So you can front run because you know where the bulls are going to buy tomorrow, so maybe buy it today. You know where to counter trend trade because you can see it's clearly an exit zone. You know how to stop hunt because it's the end of the week and we're at the target and everyone's standing around like, should I get out now? Should I get out now? Should I get out now? So you help them make the decision. And you create a cascading avalanche of stop orders being triggered. It's not complicated. But you have to know how to trade. And you will not fully appreciate trading until you understand the why. Why would they get out there? Why would they sell now? Why would they sell next week when everything is up? Those are all great questions, and you will need to learn that there's a high probability of dollar strength next week. It's not for sure, but there's a more than reasonable probability. And I'll tell you why. He's going to tell. He's going to tell. Right? He's going to tell. A little thing called taxes. So if you had a kick-ass year and you made a boatload of money, if you take profit now, you will pay taxes in 4 months. If you take profit next week, you will pay taxes in 16 months. Do you want to pay taxes in 16 months or do you want to pay taxes in 4 months? By the way, while you wait for the 16 months, you can trade the money that you earmarked for your taxes. So if you owe $1 million in taxes, do you want to pay them now or later? If the answer is later, you're going to take profit next week. If your answer is you want to pay now, you already took profit. That's it. Is that on your chart right now? No. Is it technically there? No. Doesn't matter. You don't see it. I don't see it. But if it happens, I'm going to crush it. And if it doesn't happen, I'll be cautious. Okay? See how simple it is? I don't know if I'm right, but the logic and the understanding makes sense. It's only humans doing business with each other. They're trying to buy a bigger house, send their kids to a better school. They want to retire with money so they can travel the world and maybe just make the world a slightly better place. It'd be great if they remembered you after you were gone. This is all that people do. So if a new factory is going to be built in another country, money's got to move. If you want to go on vacation, money's going to move. If you're looking for interest rates that are higher than what you can get in your country, you'll probably go to a developing world country that will pay you higher rates. Cool. So the money's going to move. If you're going to rotate out of the U.S. stock market at an all-time high and buy some other stock market, money's going to move. Money's got to move. Okay? As long as we have open borders, money will move. If we have closed borders, you will have a whole lot of nothing to buy. And when you get the opportunity to buy nothing that you want, that nothing that you don't want is going to be too expensive anyways. Then the government's going to hand out things like coupons so you can buy chicken. And then you get to the chicken store to get your coupons, and there ain't no chicken. So you're going to have rice and beans and seaweed. You're like, but I wanted chicken. Sorry, honey, no chicken today. But you got all those coupons for free chicken. Thank you, government. So what you want is open borders. The exchange of not just money, but ideas. Entrepreneurialism. If we make our world entrepreneurial, we can fix anything. Yeah. Oh, actually, Owen, we eat a lot of seaweed in my house. It's wild. Like, my kids buy bags of seaweed to eat. Yeah, we're an interesting family. I'm like, hey, we're going to the Asian market. Like, really? We want to go. And we get there, and you should see me, man. I just load the cart. Deep fried? No, I think they're just dried. Yeah. So anyways. All right, so it's been a full day. Thank you for your time. Thank you for your participation in the community. This is the day before the last day. Now, tomorrow, if you're in my swing trading group, we will meet and plan next week. Also, if you're in my swing trading group, we will meet on Sunday as the market opens for what could be the beginning of a big, big profit-taking move. Or not. And then, not next week, but I guess starting the second week of January, we will start the macroeconomics course, which will be sort of the next step to what already exists, which is the fundamentals course. So I will rename the fundamentals course the monetary policy or central banking. I guess I will rename it the central banking course. Monetary policy. Well, what decision or what mechanism does a central bank use to decide what the monetary policy should be? And that would be macroeconomic analysis. And that's what I'm going to teach you in January, just for fun, because I love you, because you're my sweet baby, and also because you became an annual member of my group, which means you've committed to another year of success, which makes me commit to another year of success. So thank you for that. If you want to join that group, Wayne at fxbootcamp.com. I've only sent out one email, I think. One email, that's it. So it's not a high pressure, hard sell. I sent one email, that's it. So if you didn't get it and want to be part of it, Wayne at fxbootcamp.com. So thank you to Traders Way. Thank you to you. Thank you to YouTube and Twitter and Twitter and Twitch and Facebook, I guess. I still don't get Facebook. Peace on earth. May the pips be with you. May your profits be above average. And I will see you guys tomorrow. Huh?